Subscribe to TechMT by clicking the subscribe button and tap on the bell icon to get all my latest awesome tech video updates.
Hello YouTube, this is Praveen for TechMT. In this video, I'll be telling you about GST. GST means Goods and Services Tax. It means we're paying tax to the central and state government for getting goods and services. These are called as taxable supply. Before going to know more about the GST, let me tell you about the old tax structure.
In our old tax system, we have two types of taxes. They are direct and indirect taxes. Under the direct taxes, we have income and corporate tax, and when we come to indirect taxes, we have central and state taxes. Now let me tell you about the GST structure. Like from the old tax system, we have the direct taxes and it doesn't have any impact on GST. But the indirect taxes is replaced by GST. And under the GST, we have central GST and the state GST or integrated GST. In central GST, we will pay taxes to the central government, and in state GST, we will pay taxes to the state government. Integrated GST means when the goods that manufactures in one state and then moves to another state, then we have to pay the integrated GST. This IGST will be divided equally between the two states. When we pay the IGST, then you don't need to pay the state GST. Now, let me tell you how the VAT Input Tax Credit differs before GST and after GST. Suppose the product manufactures in one place and moves to another place within the same state, then the VAT Input Tax Credit applies. When the same product moves from this state to another state, then the distributor have to pay the central tax where no VAT is applied here and final product price increases. In GST structure, there are no individual taxes. So the distributor will get input tax credit at any stage. For example, the product manufactures in one place and moves to another place within the same state, then the manufacturer have to pay the GST. And when the same product moves from this state to another state, then the distributor have to pay the difference, where the final price of the product decreases when compared with old tax system. Now let us see the major differences between the old tax system and the new GST system. And for easy math, I am taking the flat tax rate as 10%. Let us consider the old tax system. Firstly, the manufacturer gets the goods for 100 rupees. It includes 10% tax, which is approximately 10 rupees. Now he adds his profit of 10 rupees and sells the final product to the distributor for 110 rupees. Distributor adds his profit of 20 rupees and the cost of the goods is now 130 rupees. As the distributor have to pay the 10% tax, which is 13 rupees, and the cost of the product is now 143 rupees, and he sells it to the wholesaler. Wholesaler also adds his profit of 20 rupees and the cost of the product is now 163 rupees. As the wholesaler need to pay the tax of 10%, which is 16.3 rupees, and the cost of the goods is now 179.3 rupees. Likewise, the retailer gets the product from the wholesaler for 179.3 rupees and adds his profit of 20 rupees and he pays the 10% tax on the product cost. Now, the final price of the product becomes 219.23 rupees. Now, let's take a look at the GST system. Firstly, the manufacturer gets the goods for 100 rupees. It includes 10% tax, which is approximately 10 rupees. Now he adds his profit of 10 rupees and sells a final product to the distributor for 110 rupees. Distributor adds his profit of 20 rupees and the cost of the goods is now 130 rupees. In GST system, we don't have to pay the tax to the tax. So, the manufacturer already paid the tax of 10 rupees and it should be subtracted from the distributor tax of 10%, which is 13 rupees. Now the tax that should be paid by the distributor is 3 rupees and the cost of the product remains 130 rupees and he sells it to the wholesaler. Wholesaler also adds his profit of 20 rupees and the cost of the product is now 150 rupees. As the distributor already paid the tax of 13 rupees and it should be subtracted from the wholesaler tax of 10%, which is 15 rupees. Now the tax that should be paid by the distributor is 2 rupees and the cost of the goods is now 150 rupees. Likewise, the retailer gets the product from the wholesaler for 150 rupees and adds his profit of 20 rupees and the cost before the GST is 170 rupees. As the wholesaler already paid the tax of 15 rupees and it should be subtracted from the retailer 10% tax, which is 17 rupees. Now the tax that should be paid by the retailer is 2 rupees and the final price of the product becomes 170 rupees. Now let me tell you about the GST slabs. Like income tax, we too have the slabs in GST. It was divided into 5 categories. In 0%, we have unpacked food grains, 5% widely used items like oils, packed grains, etc., 12% to 18% normal items like medicines, computers, fertilizers, services, etc., 28% luxury items like cars, cosmetics, etc.
That's it about the GST. If you like the video, hit the like button down below and consider sharing this video with your friends. If you have any queries, drop them in the comment section. Also, don't forget to subscribe to this channel for more awesome videos. Your contribution is more to us. This is Praveen signing off. Hope to see you in my next video. Thank you.